The unexpected rate cut overnight, because they just looked like everyone thought they weren't going to cut the rates. They were going to do these little targeted fiscal steps. Boom. And that, again, a lot of people heard this and reacted.
Yeah, it's just one more layering on of surprise factors, because the Chinese demand, they are the largest importers of oil in the world, that has been a key factor in the bull case for oil, and now it appears to be deteriorating. The concerns about China demand are offsetting the tight market supplies we're seeing. And in Asia, trading were pretty much unchanged from the pullback we saw to a 2-week low, as mentioned in the U.S. session. Also seeing a pullback in Brent crude. Now, the oil markets are suffering from economic global concerns. And one UBS analyst points out that China's economic data continues to disappoint, while in the U.S., we've got data like retail sales that came in stronger than expected, and that is creating concern the Fed may have to hike yet again. So you've got all this sentiment, despite the fact that the physical markets of oil continue to show signs of strength because of the tightening. We not only have the lower output by the OPEC Plus nations led by Saudi Arabia, we're seeing crude supplies in Cushing, Oklahoma, that's the major hub, at the lowest level since April, and Asian refiners, according to statistics, continue to ramp up imports. In fact, we've got fresh data from a data intelligence firm that Chinese are buying the most Iranian oil in a decade, because the surge in Brent is making the sanctioned crude more attractive. So put it all together, how does it make sense? Well, the rally in crude that we've seen is really fizzling on concern that that Chinese demand quotient really isn't there, and that demand has likely, analysts say, peaked for the year.
Sue, at the same time, we've got European natural gas prices continuing to spike. What's the latest there?
Well, that has a lot to do with what's going on in Australia, Paul. Natural gas spiking for the second time in less than a week, and a lot of market tensions continuing to rise over the possibility of strikes in Australia. In fact, there's been no progress in the early discussions that took place between union officials and Woodside Energy Group. That's one of 2 companies operating those affected LNG facilities in Australia, and traders are closely monitoring these talks. They say an Aussie walkout could put 10% of liquid naturalized gas, that's LNG exports, at risk. And so, again, what we saw with the benchmark Dutch contract, which you just saw, it settled 13% higher after spiking as much as 18%, and futures surged 28% earlier on August 9th. There's a concern, unless there's more clarity on where this potential strike is going, that there'll be a short-term bull run in prices.